Welcome back. The government claims that the economic recovery policy in the midst of the COVID-19 pandemic is on the right track. The government even ensures to continue implementing the national economic recovery policy to maintain the momentum for improvement of various indicators.
In order to recover the national economy, the government stated that it will continue to carry out various policies to maintain the momentum for improvement in various economic indicators. One of them is the government's efforts to increase people's purchasing power amid the COVID-19 pandemic, especially in facing the economic growth in the third quarter of 2020. Regarding economic recovery, President Joko Widodo explained that the government still has time for positive economic growth and Indonesia can avoid recession. He even asked that programs prepared for economy recovery must be implemented as soon as possible. The program is believed to be able to prevent economic growth in the third quarter from contracting again. One of the programs requested to be accelerated is the Cash Transfer Incentive Program. Previously, in the second quarter of 2020, Indonesia's economic growth contracted to minus 5.32%. If there has been no change in the third quarter and the economy is still minus, it is believed that the Indonesian economy will experience a recession. From all sources for IDX Channel.
Yeah, in the midst of economic pressure due to the COVID-19 pandemic, a number of countries reported negative economic growth, including Indonesia, which recorded economic growth of minus 5.32% in the second quarter of 2020. However, does the economic slowdown continue, or there are signs of recovery? To be clearer, let's take a look at the first graphic today. The first one is about Indonesia's foreign exchange reserves. As you can see, one of the most interesting fact is what happened in August 2020. The Indonesia's foreign exchange reserve reached 137 billion US dollar, and it was broke the all-time high. And this one is taken from the Bank of Indonesia'S and IDX Channel research. And compared to the another data, August, as I told you before, it reached the break all-time high. And Indonesia's foreign exchange reserve set another record, surpassing the previous record in July 2020. Indonesia's foreign exchange reserve in August are equivalent to 9.4 months of imports, or 9 months of imports and government external debt payment. This figure is above the international advocacy standard, or around 3 months of imports. Meantime, Bank of Indonesia revealed that the increase in foreign exchange reserve was influenced by the withdrawal of government foreign debt, tax revenues, and oil and gas foreign exchange. As one of the economic indicators, Bank of Indonesia assesses that the foreign exchange reserve are capable of supporting external sector's resilience and maintaining macroeconomic and financial system stability. So what other economic indicators are starting to show recovery? Let's check to the next graphic. This one is about Indonesia's retail sales index from January 2020 to July 2020. As you can see, the data is quite fluctuative. By January, the Indonesia's retail sales index reached minus 0.3, and then on February, minus 0.8. In March 2020, it was on minus 4.5. In April, 16 or minus 16.9. And another number or another data, as you can see from the screen, and by July 2020, the Indonesia's retail sales index was on the level of minus 12.3. Even though it's still in the contraction phase, the retail sales index in July 2020, which grew negatively at 12.3%, is still better than the previous month, which contracted by minus 17.1%. This improvement is said to occur in almost all retail sales of commodities. Regarding the data, economist of Bank Permata, Joshua Pardede, sees that the increasing trend in retail sales shows a gradual economic recovery after experiencing a significant slowdown in April and May. And furthermore, the growth of the retail sales index in August 2020 is projected to get better at minus 10.1%, which would be driven by increased public purchasing power, discounted prices from retailers, and smooth distribution of goods. And as the retail sales index increases, what are the expectations of consumers regarding economic conditions? Let's move to the next graphic. The third graphic is about Indonesia's Consumer Confidence Index from January to August 2020. As you can see, from June, July, and August, it showed improvement in the last 3 months. But before that, it was not, not the best data, as you can see. And this one is compiled from Bank of Indonesia and IDX Channel's research. The Consumer Confidence Index in August 2020 only slightly increased compared to the previous month. Even so, it shows consumer expectations of improving economic conditions. Regarding the data, the economists assessed that the increase was driven by the realization of the National Economic Recovery Budget, especially for social protection, specifically for people with expenditure level of 2.4 million rupiah per month. But economists say that this condition is in contrast to the condition of the upper middle class, where the Consumer Confidence Index for the class with an income of 5 million rupiah and above has actually decreased. And yes, this is what the government still needs to improve. And from the number of signs of economic recovery, it turns out that there is still one threat that cannot be underestimated, is the threat of deflation. To be clear, let's take it through the next graphic. This is the Indonesia's Consumer Index and month-to-month CPI, the darker one, and the lighter one is year-on-year CPI. And the lowest inflation in the last 20 years was recorded in August, 1.32%. But meantime, deflation in 2 consecutive months, as you can see on July and August, by minus 0.1 and minus 0.05. The Consumer Price Index is closely related to people's purchasing power. If people's purchasing power does not increase, deflation is inevitable. And this is even already confirmed by the data in the last 2 months. The deflation cannot even be separated from recession. When the economy goes into a severe recession, the economy slows down, demand for consumption and investment plummeted. So the deflation or falling prices are not a good indication for a country, but a sign of an economic crisis. Meantime, for information, some of the negative impacts of deflation include the lack of absorption of company production by the people, which makes the company reduce production capacity and in the end to lead wave of layoffs. The sluggish economy also has an impact on investment performance, which continues to depreciate. One of them can be seen in the capital market. In addition, the deflation also has the potential to increase non-performing credit or loan, and it triggers the financial sector to experience major losses and loss of liquidity. It's definitely a condition that all of us do not expect to happen. So with those data, we hope to all parties, especially the government, can take steps or strategies that are more effective in recovering the economy. Stay with us because Market Lines will be right back after the break.